Good morning. You know, it's a strong start to the day with both JP Morgan and BlackRock earnings. Frankly, not a moment too soon. Here's my playbook. Number one, this company is beating inflation even if the Fed can't. This is not a difficult proposition to understand. Rising prices kill economic expansion, and raising rates is the only way to stop that, the most direct way. But at what cost? It begs the question because every economic expansion in the history of our country has been put to death by the Fed. That's why companies like JP Morgan make tremendous sense at the moment and why I want to see you own shares. Because rising rates mean fatter profit margins. Watch my take this morning with David McDowell, who sat in for Maria Bartiromo on the Fox Business Network, right here on my channel. Point number two, a nation of quitters. More than 4.3 million people quit their jobs in August, according to the data. They were not fired, not terminated, not laid off, whatever euphemism you want to use. They quit voluntarily, with hundreds of thousands of retail and healthcare workers walking right out the door. Now, economists say this is a sign of a strong recovery because they feel confident that they can get a job elsewhere, but that's a load of it. They're walking because it's broken. Point number three, Jack's back in Hong Kong. Apparently, Alibaba founder Jack Ma was seen in Hong Kong a few days ago. Now, I don't think this is a coincidence given the ongoing Chinese crackdown. Alibaba is listed there, and Hong Kong is a gateway for his company's offshore business operations. My guess is that Jack Ma has finally been let out of the oubliette because he's rolled in the face of Beijing's crushing crackdown. Nothing happens by chance in China. Ma is a kite dancing in a hurricane, to paraphrase Mr. White, speaking about James Bond standing up to Spectre in the 2015 smash hit by the same name. Investors, beware. Beijing's charm offensive is next. Point number four, here comes one heck of an earnings season. C-suite execs are increasingly talking about 2022, and that further highlights the forward-looking nature of things we've been talking about. Savvy investors should pay attention. You don't invest in companies based on where they've been. You buy and you invest because of where they're going. The markets are moving lower into reporting, and that sets up, you guessed it, a rise in the next year. My year-end S&P 500 target, by the way, is still 4675 and another 15, perhaps even 20% higher from here 12 months out. It's all about the margins from here forward. The best companies, meaning those with visionary CEOs, margin protection power, and global demand, will simply power up. The rest, well, let's just say you better think twice about owning them. Apple, Microsoft, you know the drill. Point number five, beam me up, Scotty. William Shatner is going to be the oldest person in space today when he blasts off aboard a Blue Origin rocket. Thing is, he's not old at all in my mind. In fact, I wish him the very best and hope space is everything he's ever dreamed of. Green women are optional, of course. Today's bottom line, many people long for the past, but the real beauty is inherent in what's to come, especially when it comes to the financial markets. There are literally trillions of dollars on the move, which begs the question, are you? As always, let's make it a great day, and I'll see you next time. Thank you for watching today's Morning 5 with Fitz. Click subscribe to get daily market notes right here on YouTube, or sign up for the email versions at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and more.